Citigroup just out with earnings. Wilfred Frost is here. And Wilf, take it away. What are the numbers?
Yes, so a nice revenue beat, small revenue beat, 19.3 versus 18.8 billion. Big EPS beat, 3.62 versus forecast of 260. Similar themes to the others. Very strong capital markets and a $2 billion benefit on the provisions for credit losses line versus a forecast of a $400 million cost. And that's the reason for the big EPS beat. But the much bigger news, guys, is that they are pulling out of 13 international markets in their global consumer business, not in their institutional business, not in their private bank, global consumer. This includes some big markets, the likes of Australia, China, India, Korea, Russia, to name but a few of those markets. They will now operate out of 4 hubs in that region: Singapore, Hong Kong, UAE, and London. And this is part of Jane Fraser, the new CEO's ongoing review. She's already spoken of wanting to focus resources where they have advantages. And she provided me with this quote this morning that says, as a result of the ongoing refresh of our strategy, we've decided that we are going to double down on wealth. We'll operate our consumer banking franchise in Asia and EMEA solely from 4 wealth centers: Singapore, Hong Kong, UAE, and London. This positions us to capture the strong growth and attractive returns the wealth management business offers us through these important hubs. While the other 13 markets have excellent businesses, we don't have the scale we need to compete. We believe our capital, investment dollars, and other resources are better deployed against high returning opportunities in wealth management and in our institutional businesses in Asia. Again, worth reiterating, institutional and private bank, they'll still be in all of those markets, but within the global consumer businesses, pulling out of around 13. And this is part of that strategy. New CEO, fresh pair of eyes, try and focus where they really have advantages. Is worth noting, though, even though they're pulling out of some of these markets in wealth, they're still pretty big in wealth in Asia, despite now slimming down where they'll operate out of about the ranks number 3 in wealth management. And then within the institutional business, which is not pulling out in any of these markets, Asia is very important to them, and they stay committed in that area. It'll be very interesting to see how this is articulated on the earnings call, and also to see how people react. A lot of different analysts have wanted to see them focus rather than try and do everything everywhere throughout, and seeing 2% reaction from this news and the earnings as well, guys.
Yeah, Wilf, you said that they're pulling out of some big markets, the biggest, China and India, both in that list. So that is a pretty significant move. I can understand why analysts have wanted them to focus more on the places where they have an advantage, but this is a pretty significant move.
Very significant. And again, you just reiterate the key point. Institutional will still be there. And in fact, relative to their biggest rivals in the investment banking space, that they are very big in Asia. So they're not needing to pull out of any of those particular types of businesses. In global consumer, they don't have as big a footprint, and clearly deciding to focus into 4 hubs. Of course, don't forget that pulling out of those markets in terms of a specific presence doesn't necessarily mean you don't do anything in that space, and they have those hubs, as they're calling it. But no, it's definitely a significant step, and it's going to be great to hear some numbers articulated as well. How much is this going to save them? How long will it take to make this transition? And how much will it cost them, I guess, on the top line, as you say, Becky, because there are some big markets involved there that they'll be stepping out of. It's gaining a little bit more now, 2.4%. And I just say that this is one of the key areas people have been looking for. It's interesting, actually. It comes off the back of Goldman and stuff yesterday, who were saying on their earnings call, and various analysts were discussing this afterwards, that we've seen a snapshot in the last month or two that basically European banks can't seem to have that universal banking model. We've learned that recently with the Credit Suisse issues, the Nomura issues. US banks, the really big ones, can have that universal model. But the theme of the last year or so has been focus where you've got your strengths. Don't try and do everything in every market unless you've got the scale to do so. And I think this fits in with this, that theme that we've been learning about. And it also fits in with what people have been wanting to see from Citi and Jane Fraser, fresh pair of eyes, new CEO, acting pretty swiftly, I would argue.
Shepard Smith here. Thanks for watching CNBC on YouTube.